Hey everyone, stop scrolling, because right now something massive is happening that could slam Bitcoin harder than you think. Oil barrels that can actually make it out of the Middle East are trading over $100 a barrel. Murban Crude, the one benchmark that bypasses the chaos in the Strait of Hormuz, just hit $103. That's not hype, that's real physical demand screaming supply fears. If you're holding BTC or any crypto, this could mean tighter liquidity, delayed rate cuts, and a serious risk-off move. Stick around, I'm breaking down exactly why this matters for Bitcoin and what you should watch next. If you're new here and want breakdowns like this on macro events shaking crypto, hit that subscribe button and turn on notifications. Let's dive in. Quick context. A week ago, the military conflict involving the US, Israel, and Iran escalated big time. Iran has disrupted flows through the Strait of Hormuz. That tiny choke point carries over $500 billion in oil and gas every year. Tankers are avoiding it, getting attacked, or just hiding. The oil market split in two. Barrels stuck behind the strait, vulnerable, prices spiking on fear, and barrels that can still move safely, like Murban from UAE, shipped out of Fujairah terminal outside the Hormuz zone. Murban is now the safe gauge, and it's trading at a massive premium, over $103, while WTI sits around $91 and Brent $93. That's refiners in Asia, Japan, India, etc., and Europe desperately paying up for prompt deliveries that actually arrive. This isn't futures speculation. This is real, physical stress. And when oil accessibility becomes the story, geopolitical risk gets priced in hard. Let's break it into the four big insights driving this and why Bitcoin feels the heat. Insight 1. Geopolitical risk is now fully in the physical oil market. Murban over $100 signals that traders aren't just betting on headlines, they're competing for barrels that can actually reach buyers. This premium shows acute supply fears, not just maybe disruption. Example, Asian refiners are scrambling because their usual Gulf supplies are at risk. One delayed cargo can cost millions, hence the bidding war. Insight 2. Spillover to global benchmarks is coming fast. When markets open Monday or already reacting, WTI and Brent could jump into three figures quick. We've seen 30% surges in both since the conflict kicked off. Why it matters? Higher oil equals higher inflation expectations. Central banks hate that. The Fed was pricing in cuts. Now those are getting delayed or scrapped. Insight 3. Liquidity tightens and risk assets suffer. Bitcoin has no cash flow, it's pure risk on. When oil spikes, inflation fears rise, higher for longer rates, less cheap money floating around. That crushes liquidity for speculative assets like BTC. We've already seen markets discount Fed cuts after this week's oil jump. Insight 4. Bitcoin's mixed role in chaos. Sometimes BTC acts as a digital gold, safe haven in uncertainty, but right now it's behaving like a risk asset, dipping with stocks when oil fears spike. Short-term inverse to oil surges, long-term geopolitical mess could favor BTC as a hedge, but only if the conflict doesn't tank global growth. Myths. Myth 1. Oil spikes always pump Bitcoin as an inflation hedge. Wrong. Short-term, oil-driven inflation fears tighten financial conditions, bad for BTC. We've seen BTC sell off 3 to 5% on these oil surges recently. Myth 2. This is just another headline. Prices will crash back. Not this time. Physical disruptions, Hormuz blocked from many tankers, output cuts from Iraq, Kuwait, UAE mean real supply constraints. Analysts warn $100 plus could stick if it drags on weeks. Myth 3. Bitcoin is decoupled from traditional markets. Nah, correlations spike in crises. When Nasdaq volatility rises from oil commodity swings, Bitcoin gets hit hard too. Practical tips. Here are 4 actionable moves if you're in crypto right now. Tip 1. Watch oil benchmarks daily, especially Murban on oilprice.com. If it holds $100 plus and WTI and Brent follow, expect BTC pressure. Set alerts. Don't get blindsided. Imagine catching that early dip before the herd panics. Tip 2. Hedge your portfolio. Consider stablecoins or gold exposure temporarily. Why? Reduces volatility while you wait for clarity. Geopolitical fog clears eventually, but protect gains now. Tip 3. Zoom out on BTC charts. Look for support around $66,000 to $68,000. If oil keeps ripping, test that zone. But if conflict de-escalates fast, bounce could be violent. Position sizing is key. Don't go all in on fear. Tip 4. Stay informed, but don't FOMO trade headlines. Follow reliable sources like CoinDesk, oilprice.com, and macro analysts. One solid update can save you thousands. Knowledge is your edge in chaos. Real example. Quick real example. Back in early 2026 escalations, similar Hormuz scares, oil jumped 13 to 15% in days. Bitcoin initially dumped with risk assets, falling toward 63K lows, but rebounded to 68 to 70K as some saw it as a hedge. Lesson? Short-term pain from liquidity squeeze, but longer-term resilience if dollar weakens or uncertainty lingers. History rhymes. Watch how fast the market prices in higher for longer rates. Bonus insights. Bonus 1. Asia feels this hardest. Murban Premium hits their refiners first. If Japan, India demand stays hot, prices stay elevated. Bonus 2. Watch the dollar. Stronger USD from risk off adds more BTC pressure. Bonus 3. Extreme scenario. If Hormuz stays disrupted 4+ weeks, oil could hit $150 in worst cases. That flips everything. Recession fears could actually boost BTC as the ultimate hedge, but that's tail risk. To recap, Murban over $103 is a flashing red light. Geopolitical supply crunch is real. Inflation fears are back. Liquidity tightens, and Bitcoin, as a risk asset, faces near-term downside pressure. But markets overreact, then adapt. Stay sharp, manage risk, and position for whatever comes next. If this breakdown helped you connect the dots between oil chaos and your portfolio, smash that like button. It really helps the channel. Drop a comment. Do you think BTC dips harder or bounces as a hedge? And subscribe for more macro crypto breakdowns. We've got a deep dive on what happens if rates stay higher coming soon. You won't want to miss it. Thanks for watching. Trade smart out there, and I'll see you in the next one. Peace.